FHA student loan guidelines no longer use 1% of your balance as a phantom payment. They use 0.5%. That single change is putting buyers back in the game who were told no. You are probably watching this because a lender ran your numbers, saw your student loans, and said your debt-to-income ratio was too high. A client of mine named Devin, a teacher in the Low Country, had $90,000 in deferred loans. His bank plugged in $900 a month as a required payment. He had never paid $900 a month in his life. That number came from a rule that no longer exists. Stay to the end, and I will give you the exact sentence to say to your lender before you walk away from a purchase. Here is how the current rule works. If your student loans are deferred and you cannot document an actual monthly payment, FHA now requires lenders to use 0.5% of your outstanding balance, not 1%. On $90,000, that is $450 instead of $900. That $450 difference dropped Devin's debt ratio from over 57% to just under 48%. Still tight, but now there is a real conversation to have. And if you are on an income-driven repayment plan with a documented payment lower than the 0.5% calculation, FHA uses your actual payment, even if that payment is zero. Your servicer statement beats the calculation every time. For Devin, I pulled his servicer documentation, confirmed his actual payment, and ran the correct 0.5% calculation where documentation was not available. I found a lender whose system was current. We closed. Most banks run one system. I work across multiple lenders, and I read the actual guidelines. That is how I find the path when one door closes. Here is what I promised you. Go to your lender and say this exact sentence. Are you using my actual payment from my servicer, or are you using 0.5% of my balance? The 1% rule is gone. If they pause, if they go check, you just saved your own approval. If you want me to review your file personally, call me at 843 low rate. That is 843-569-7283. Like and subscribe if this helped.